Yo, what's going on everybody? My name is Ryan, I'm a CPA, and today I'm going to do another edition of CPA Reacts. I just got one for you. It's a good one because we can kind of deep dive into this one. All right, so basically with CPA Reacts, I go around and scour the internet and look for things that people say or advice that other people give and kind of just either react or tear it down or give the actual factual thing that it's supposed to be. And I figured if people are asking these questions, then, obviously people want to know about it. So hopefully I can bring that clarity to all of you. All right, so today I got this post on Facebook. It says, I was told by another tax pro that if a client has more than 6 rental properties, they must report that activity on a Schedule C. She has taken continuing education classes that have been teaching this. I can't find anything to support this. Her position is that when a client has more than 6 properties, he is in the business of renting property and is subject to self-employment tax. So whatever this other tax professional is doing that, or whoever's teaching this continuing education class is just full of crap, okay? You can have 30 rental properties, 40 rental properties, and they should not be considered self-employed income. And I'm talking here about long-term rentals, When it comes to short-term rentals, then there's some nuances there. So I'll talk about that as well. But you have long-term rentals, they should always go on the Schedule E on your personal return. If you own them personally or if you own them through a single member LLC, they should always go on the Schedule E. They're never self-employed income, okay? You can own the properties in a partnership or a multi-member LLC, and in that case, those properties go on the Form 8825, which is the form for rental properties. Now, if you form a partnership, you got to file a separate tax return and all that. Rental properties that are long-term rentals always go on Schedule E, no matter what, no matter how many properties you have, no matter if you're a real estate professional or not, whether you spend the majority of your time managing rental properties, they should always go on Schedule E. Now, there are some CPAs that say if you have a short-term rental, like an Airbnb or a Verbo rental, that they should go on to Schedule C. And just the fact that they're a short-term rental does not mean they should go on to Schedule C. There are several criteria that the rentals have to meet in order to go on Schedule C. Okay, so let's think about it first. Why would you want to put a rental on Schedule C? Are there any tax benefits there? Well, Schedule C is for self-employed income. That means Schedule C also incurs self-employment tax on top of income tax. So your rental property is making a profit, then you're actually paying more taxes by putting it on the Schedule C than leaving it on the Schedule E. The upside is if your rental property, if your short-term rental is taking a net loss for the year, a Schedule C would allow you to fully take that loss against your other sources of income. Whereas a Schedule E, those losses could be limited severely depending on your other sources of income. So with the pros and cons out of the way, the only reason that short-term rentals should go on to Schedule C is if you provide what's called substantial services for your tenants, and if the average length of stay is 7 days or less. All right, so let's say you meet the average length of stay of 7 days or less, and so what are substantial services? Substantial services are things that a hotel or a bed and breakfast would provide. So that is cleaning rooms while the tenant is living there or while they're staying there. Okay, that is an important one. If you clean the Airbnb, if you clean your property only after the tenant leaves, that is not substantial services. Okay, but substantial services means cleaning the room, turn down services, providing meals, all while the tenant's there, providing a concierge service, helping them connect with tours, transportation, that kind of stuff. Those are all substantial services that you provide that makes it more of a self-employed income. Just having an Airbnb property just having a property that you Airbnb or that you Verbo does not automatically qualify it for a Schedule C. So just be aware that some people will try to put it on Schedule C automatically, and it really requires some nuanced consideration. So with that being said, the differences between Schedule E and Schedule C, the pros and cons of why doing it one way would be more effective or more beneficial than doing it the other way. What about people who are real estate investors, or people who do real estate as their primary job, or who spend the majority of the time doing real estate? Well, people who spend the majority of the time doing real estate won't get to have the problem of the losses being limited on their rental income. So earlier I told you, if you put your Airbnb property on Schedule C, you can take all your losses against your other income, no problem, right? And if you put it on your Schedule E, your losses might be limited depending on how much money you make. But if you're a real estate professional, or if you spend the majority of your time, the majority of your hours during the year in real estate, you substantially participate, you materially participate in real estate, then those limitations of losses won't be a factor. IRS has very specific definitions on what's a real estate professional and what they consider as materially participating. So be sure to check that out before you just go marketing yourself as a real estate professional, because I've seen that done before, where tax preparers just mark themselves as a real estate professional just to get the ability to deduct losses against their other income. So that's a good segue to point out that a lot of tax preparers out there kind of suck. There's people that are unenrolled, there's CPAs, there's EAs, there's bad apples in all those categories, all right? And, people who promise you big refunds, you want to stay away from those tax preparers, because you can't promise that. If you promise that, then you might be making up bullshit expenses just to get people tax refunds, and then you can just bounce and never represent them in an audit because you can't, and it's just a bad news all around. So sometimes the good tax preparers might get you a less of refunds than the bad ones, or sometimes the good preparers might get you less a refund than even the tax software, because they're doing it correctly. And sometimes when people do their own taxes on tax software, they might be inclined to push the boundary, even if it's illegal, on the software to claim these expenses and make these mistakes that might get them a bigger refunds, but it might not be legal. So I would say, when looking for tax preparers, or when looking for somebody to help you with your taxes, stay away from the people that will offer you the biggest refunds. I would say look for people who say they will do it correctly, and who would try to lower your liability as much as possible. Because lowering your liability is different than promising a bigger refund. Because you might legitimately owe taxes, but if we can lower your liability, then you might just owe less taxes. Okay? If we promise you refunds, even though you're supposed to owe taxes, then we're doing something shady, and that is not good for you. All right, so that's all I got for today. Thanks for joining me. Hope you have a good weekend. Next week, I'll talk about tax refunds and when you should be expecting them and what's all going into that. All right, so take care for now. Stay safe, and I'll see you next time. I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that say stick up. She picture perfect, so I told him I'm a flick up. Bill, I'm in the mood for a change up. I leave the city and return with my change up.